Okay, so we've jumped into ClockOn here. And so to get to the allowances and setup, the allowances and deduction manager, it's under setup. And we've got allowances and deductions here. Now what this window does is we've got a template, and that is like a group of allowances and deductions that are for a set of employees. So you might have full-time employees. So I've got a few examples set up here. So say the full-time bar staff on this one. These are all of the allowances and deductions potentially that a full-time employee will get in there. And so you would set this up as the template and assign that to all of your full-time staff that get those groups of allowances. Now there is an area, which I'll get into in a second, where you can sort of turn on and off those. So everyone might not, for instance, in this case, might not get the first aid allowance, but a majority of people do, or a group of people do, but a few people get an adjustment to that. And so this one's for the full-time staff. And then we've got one for the part-time and casuals here, per se. And while they get a first aid allowance and laundry allowance here, they're set up slightly different. This particular one we've got a fixed dollar amount that's based on worked timesheets that they do and perform. So they're only going to get that $2.05 on shifts that they actually work. Whereas if we come into the other template, on the laundry allowance, they're getting a straight $6 a week in there. So that's why you might have different types of groups of allowances. And one advantage of doing a template is when you set up the template, we can then apply that to the group of people. So I can sort by the template set. And so we've got bar, full-time staff here, groups on there. So we can then assign that to those particular people. When I'm in this particular screen, if I double click on the rule set for that person, so this is the bar assistant 5, this becomes their specific copy of that. And you'll notice down on the right-hand side, there are a couple of options there. So what I can do is I can deactivate that allowance. So it leaves it in there, but it's not going to show up at payroll and not going to be paid. A modified tick means if I make any changes to this specific employee's allowance, it will have a modified tick. And from template means that this current allowance is coming from the template. Now, any allowance that is from template, I'd probably recommend not modifying. And the reason for that is, so we've got the first aid allowance of 1971. So if I close out of here and I come back to the template, we'll then change this to say 1982, or 982 I should say, and we click save on that. So that's updated the template. Now when I apply that particular template, and then I'll hold my finger on shift and select those multiple employees and apply that, that applies that adjustment to each of those particular templates. And so now we get the increase in the allowance that's on there. So in there. Now, if, for instance, we add a particular adjustment in there, and that probably most common one, or one of them might be, say, additional tax. On that, whoops, and I can't type. And we want to process that one as additional tax, and they just want to pay an extra $5 a week on that. When I click save, I'll just quickly jump back into it. That additional tax now isn't from the template, and it shows now that they have a modified template. So now when I come in, if I do make a readjustment on any of this and apply it to that particular template, so let's change this down to 979. I come in to apply that. Oops. Too many clicks, sorry. Gotta love tech sometimes. So now when I select that and apply it to the staff, this one has a modified tick. So I'll apply that. And what it hasn't done is it hasn't edited the modification of that additional tax in here. It's left it in there, but it has made that adjustment again to the allowance. So using that apply function means it can come in there and also then make the adjustments. So you can do a global adjustment on a particular template and push that out to a group of people. That can be also useful if you're adding in, say, a bonus or something and you want a whole heap of people to get that allowance. Rather than adding it to each individual person, you can add it to the template and apply the template, but it's not going to change anything that's already been modified on that particular one. Now I've deleted that. So that's one way to edit the individuals, and it's a good way just to quickly see everybody here. The other way to edit someone's individual allowances is by coming into the setup under employee details. We can then come into here, select the employee, and under the pay tab, under allowances here, we have a default allowance that's assigned, and I would recommend creating a default template that's just got nothing in it. Reason being is if you're in payroll, which I'll show you in a sec, and you want to make a change to that allowance, you can do it from within the payroll window. So using the select button, you can assign a different template if you'd like to. Just select the template and press open. And then if we click edit here, we can come in and make a change to that in the same month, showing separately in payslips. Okay, so there's a quick question, which is fantastic. So we're in the allowance here, and this is specific for this venue manager year. So let's say they want to show the commissions and bonuses in the same month, but they want them to show separately on the payslip. So what we're going to do is we're going to add those in. And so the first one that we'll call, when you click add, it already highlights the name. So we can do commissions. Thank you very much for the question because it was a fantastic segue. So we do commissions on that. What we'll do is we'll leave the dollar amount as 0. So then it's not going to always, every payroll, add in that commission amount. We want to select the pay cycle, which is weekly, and most just additions or deductions are going to be under the normal allowance type. Now we do have a whole heap of different ones that create different sort of settings in here. So for say the generic, which is global, it gives us a whole heap of other options, capping periods, on hours worked as well. So the allowances and deduction manager isn't just necessarily your allowances, it's sort of any ad hoc pay adjustments that our rule set can't handle, or is a bit more ad hoc than the regimentation of what the rule set is. And so we want weekly, it's a before tax allowance. And then under here, under the options, do we want to include that commissions into their super, or do we want it excluded? And in this case, I'm going to include it in super. Now, if it was a once-off back pay, which I'll get to shortly, when you're doing your pay adjustments, there's the pay in next pay only, which means it'll only pay in the payroll you're in, and then following that, it'll close out. And then we've also got some options of where we want to cost that particular commissions in there. So most of the time, allocate to default locations will be fine. And so this will show separate on the payslip as commissions. And then we'll add another one in and we'll call this one bonus. Again, I'll leave it as a 0 amount so it doesn't show up every week. Normal, we've got a weekly payroll at the moment. Again, it's a before tax allowance. In here, if it was a deduction, you can set that as a before tax deduction. To deal with tax, you can come into here, and we've also got after tax allowances and deductions. If we scroll further down in this process as section, there are selections, I should say, that can affect the year-to-date balance in the back end of the system. So come end of financial year, and we'll probably hold another webinar similar like this, how to do year-to-date adjustments in readying for end of financial year. You do that via the allowances and deductions. So when you process that through the payroll, they'll show up in reports. But in terms of the bonus here, and we'll include that in the super earnings base. And so we'll click save now. We do have a modified tick on this default, so Venue Manager 3 now has those two allowances and deductions assigned to him. And so if we now close out and we jump into Payroll, I'll just jump into Payroll for this particular period. If some of you get this, I know I've got a lot of new users on this session as well. You can't make any changes here. So just change your payment type to medium. And up the top, we've got a save desktop, which means next time you log in, it'll look like this as well. And so now we have all of the allowances and deductions that have been entered into the system there ready to go. So what we've got here, for instance, so bar assistant number 1, let's say they don't get a first aid allowance, they don't need that one. So what we can do from within the payroll window as well, we come to allowances up the top, and making any changes here is going to live with this employee until you make the change again. And so I want to keep it there just in case it comes back, but I'm just deactivating it. So when I click save, it then will remove that first aid allowance out of the system already. If I then come down and we have a look at, say, bar assistant 6, on this particular one, we have the first aid and laundry allowances showing for each days that they work. Now, if we have a quick look at that template for either of those first aid allowances or the clothing allowance here, they have a per work day timesheet or worked shift timesheet. So it depends on what your award says on how they should receive those particular allowances. By setting this per period, and this option will show up depending on the type that you select. So on a per day, I pick the day base. Being a laundry allowance, I pick the clothing one here, which gives us a whole heap of different options. But under the per here, by selecting workday timesheet, it means that they have to have a working or a timesheet in there. So any, say, leave entries that get put in there, then they won't get that first aid allowance for being on leave. And so how that works there, if we come into the timesheet, for instance, and we just double click and pick one of these days, and we change this into a leave entry, I'll just call it annual leave. It now has annual leave, and now we only have 2 lots of allowances, not 3 like we did before. And that's because we've picked the timesheet selection in that per selection on that one. Something else that you can do with the allowances, if we come into the chef here, he has a tool allowance set up. And you'll notice here we've got 1, 2, 3, 4, 5 tool allowances. And it's getting paid $2 on each of the days until it reaches the 5th one, where it's a $0. And so on the timesheets, you can see that they've worked 5 days in that period. But if we come into the allowances, on that tool allowance that we've got set up in here, again, I've selected a day-based type, named it as a tool allowance. I've put in a fixed $2 per worked day timesheet, so it needs to have worked that day to get the allowances, but I've added a capping period in there. So each week it will cap out at $8. So once it reaches that $8, it's not going to show up. So it'll show that they should have got that allowance on that particular day, because that was a day that was worked. However, it is capping it out. So in that window, it's going to show that they've capped out on that tool allowance. And if we just have a quick look at the preview of that timesheet, it's just going to show tool allowance for the $8, not the individual day breakdown. So they're not going to see the employees, once they get their pay slips, that they've been docked $2 on a tool allowance for the day. It's just going to show that the tool allowance is $8. So it's not going to show that cut down. The other one, allowances that we can do in here, and we quite often use, is a vehicle allowance. And this is set up where if we come into, come into the allowances, where they get paid for the kilometres that they work. So we put in the per kilometre amount here, changing the type to kilometres, travel kilometres, and selecting it per kilometre on that one. And now we can type in the kilometres. So they might have driven 86 kilometres there, and it will automatically calculate that dollar value on those kilometres. Now, another one that we use similar to the vehicle allowance, and it gets used from time to time, is if we come into here and I'll add, one might be, say, meal allowance on that, and I'll quite often just select the generic, and they might get on that meal allowance $15 for every time they get the meal allowance. So I'll set this up as a per user defined hour on this one, before tax. If it's included in super or not, don't forget to do that, and where you want to allocate those costs to. One thing that I've forgotten to mention as well is the PAYG location on those allowances. So you'll notice when I added a new one in, it will default to the gross wage and salary. If I needed to report separately to the ATO on that particular allowance, you would select allowance, and that will select that out from being a part of the gross wages and salary. So I didn't do that when I added those commissions and bonuses ones, because typically they will go into your gross wages on that. But now we've added that in, and what that does is it gives you per hours here, but we can treat it like per day. So I wanted to pay 3 meal allowances, and so it'll calculate that 3 on that. So even though it does say hours, we don't have a quantity version of this. Using the hours one and just selecting your number of how many times you want that to be paid. This week it might have just been 2 on that one. It will go through. Just quick question here. Pay an allowance by worked hours in a particular department. On that one, it will show the costings on the particular department side of things. So if we come into the allowances, we would do this. We can select it to be a worked, it's probably day-based. What have I got? So we've got worked hour timesheets in here, or shift, worked hour for the shifts. So you can do how many hours they work. In terms of costing, it's going to cost to where that timesheet is. So if it is over multiple departments, so you've got the days that they worked, you will have the breakdown of where those hours are. You can turn off things that you don't want to pay. I might need to come back to that one if there's something that specifically will enforce only to do an allowance on that department, and not for other departments where they worked. Quick off the top of my head is the best way is going to be unticking the ones that you don't want on that one, but I'll need to follow that one up. Moving forward on that, and another common one that we'll see is salary sacrifice. So your super salary sacrifice in here. So under the allowances, again, it's got a specific type that you want to select for the salary sacrifice and co-contributions. That will ensure that it's a before tax deduction and it gets reported to the ATO correctly. Now, often with the salary sacrifices, do you want to include that deduction in, like, that amount in the earnings of the employer contribution, or do you want to reduce it? It's different for each sort of agreement. So in this terms here, we've got the amount of the super earnings base here is deducted with the hours that they work, isn't deducted. If I deduct from super earnings base, that $100 we're taking out the week will reduce how much super we're calculating on at the moment. It's 154 because we're only calculating on the overtime on the normal hours on that particular one here. So it depends if you want that $100 included in their normal calculation of ClockOn or not in the calculation of super on that particular one. And then finally, we'll have a quick look at the venue manager where we added in, was it number 4? The bonuses and the commissions. And so they're in here and we set them as 0. So if one week he got $600 worth of commissions, and $300 worth of bonus. It will show up here. Clicking on the print, what they will see on the payslip and in the allowances and deduction reports is two separate lines of the bonus amount and the commission amount there. And depending on the options of the select, so you'll see here we've got bonuses of 300 and commissions of 600 on their payslip. And so depending on the other options in there, are they included in your super earnings base? And because they're before tax as well, it takes into account the tax based on what their tax category is. So we'll process this payroll and come through. And so that's sort of the basis around those allowances and deductions. And there's a lot in there, and we've got, Sharice just added a link to our deduction and management knowledge base article, just a few questions above. So that will help you. There's some examples in there as well of sort of common ones that show up. But if you do have it, if you want something specific, if you've got email support, please email support@clockon.com.au and they'll be able to assist you with that one. And so basically just a quick recap, the allowances and deductions, they are, I guess, pay adjustments that can be done within payroll. They need to have a template assigned to them to be able to make those changes to it in payroll. And the templates are groups of allowances and deductions that are being applied to a set of people, not set up per individual allowance or deduction that you want in there. One more thing, which I forgot to mention if we go into allowances and deductions, if you do have one that's very similar and you do just want to make a minor change to something, you can select it, duplicate it, give it a new one, give it a name, and then we can come into that version 2 of it, make your adjustments to what you need to make into that one, and then you want to select it and apply to then apply that change to other people. All right, so now we'll go into doing the pay adjustments on that. Sorry, I was a bit of a whirlwind on allowances and deductions, but understanding that is going to help us get in here and how we need to make those particular adjustments. So the first thing that with pay adjustments, you sort of want to, I guess, prep yourself before you get in there and start doing them. So a couple of things is you want to print off the pay slips of people's people who have had issues in that previous pay or whatever that period is for. Reason being, so you can find out what was paid and then you can use that bit of printout to help you do that particular calculation. So printing reports, hopefully in your favorite reports, you'll have your pay slips. And if it was the payroll that was just processed then that you realize that you'd made a mistake, just load that current period here, and under the person, so you're not printing out everybody's payslip, we can just come in here, clear the name, and just select the particular people who you need to make those adjustments to. So it might be just these particular, and we can preview those and print those out. Now, I've already sort of printed out a couple of payslips just to try and save a little bit of time. So the first scenario I'm going to run through is for the bar assistant 4, and essentially saying he's missed 4 hours of leave on this particular week. So we want to roll back his pay period into that particular week, add those extra 4 hours in, and then also make sure that he accrues the appropriate leave on those 4 hours. And that's dependent on his setup, if he's prorated down to only accrue hours on his leave, or if he's getting the full amount of leave each payroll, then we need to exclude that, and I'll show you how to do that. And we also need to ensure that the tax is being calculated correctly. So if I printed off a pay slip, I'd look at the hours here, and so he's missed 4 hours, so I need to add that timesheet in, but I need to work out how much that pay is to add it to the gross. So missing 4 hours, that's an extra $72 that I need to pay him, or her, sorry, on this particular one here. So the gross should have been, with that extra 72, 875. So using the tax tables from the ATO, The tax should have been 135. So we need to add in 25, an extra $25 on tax. Now, Cherie's about to send you a link with some how to find the tax tables, but there are some spreadsheets as well that you can download from the tax table, which I find pretty good. And I've merged mine in, so I've got a fortnightly, monthly, and weekly one. But you can just type that particular value in here and it works it out. So it was 139. So I can just come in here, 139, and it will calculate the amount of tax that needs to be in there as well. So we can work that out. Sorry, I should have done it on the gross, which was 875.25. So sorry, making the 139 of the tax that needs to be paid. And so we've got the difference from the 114 that was paid to the 25. And so if we come back into ClockOn, we want to now work with this particular issue in the payroll. Oops, I clicked the wrong button. So if we come back to payroll, it's automatically rolled into the next period. Now it's a missed timesheet. So what I want to do is by unincluding all employees, it then gives me the option to select who I want to work with. So I'll select bar assistant 4. I want to edit the period and I'm going to move the pay period back a week. So back to the 7th. Now, what I was saying before, if I know this person is part-time and they're accruing leave depending on the hours that they work. So I also want to accrue leave on the extra 4 hours. But if, say, they were a full-time employee and you're moving back and you didn't want to accrue leave in this payroll, you just tick the no entitlements payroll and it won't accrue any leave in this payroll that I'm processing. So I'll click save. It'll move bar assistant 4 into that previous pay period. I'll click next and enter into payroll. And so it started afresh. So that's why I printed off the payslip. So this was what he was paid previously. And we want to add an extra 4 hours. So I can come into the timesheets, just add a particular timesheet for, say, the Wednesday. We just need 4 hours. So it was 9 o'clock till 1 o'clock. Just going to auto fill that one. And you might want to put a general note in. And then that will add those hours in here with the $72. Now, because the system thinks that this is a standalone payroll, it actually hasn't calculated any tax. And we know that we need to pay an additional $25 worth of tax. So to do that, we use the allowances again. Come in, we'll click add. And we can call it whatever we want to call it. So we can just call it, say, a tax adjustment for, missed hours, whatever you want to call it. So it'll show up on various reports in there. It's a weekly. Because it's additional tax, I want to select additional tax. I'm going to leave it as 0 so I don't accidentally pay that every single time. And then pay in next pay only, again, so it doesn't show up in each pay. And I'll click save, giving me an additional line here, and I can just type in that $25. Now the super's already calculated, so we don't need to worry about that. I've got someone here that's asked, do you have to roll back the payroll or can you just add the missing hours in the next payroll? Yes, you can add the missing hours in the payroll. One thing to be aware of, and we'll get to this in example 3, is just the way that the tax is being calculated. Because when you're in a new payroll and you add those hours, while it won't generate overtime if it clicks into overtime in that period, it will treat the tax calculation as though that total gross is being calculated in that one payroll. And that may not be the correct value. You might end up paying more or not quite enough leave. So by doing it this way, it does allow you it does allow you to sort of balance that out individually with the tax. But yes, you're completely right in that you can add those past timesheets in a future payroll, and it will show up. I guess one way to do this, it might be mid-pay period when you've done this and you need to transfer the money for the additional hours that gets worked. That might be a scenario why you're doing it on a standalone by itself. And so you can run this in here. We click next, process that particular payroll, and you can generate that ABA file to upload to the bank or run out your various reports on that, on how much you need to pay in here. With single touch payroll, this is like a mid-period edit. Don't worry about submitting the STP for this particular change. Just submit the next payroll and it will have the update and the increase in that, the value of what they've earned there that's been submitted off to the ATO. And so we'll finish off on that one. And now when we come back into payroll, the bar assistant number 4 has been re-entered in with everybody else, and now we're ready to work into the next period. However, I'm aware that there is 2 more other people that have had issues. One here, if I scroll down, we've got our bar assistant number 6 on here. Now we've accidentally paid, in this case, annual leave as opposed to personal leave, so I want to adjust back to personal leave, and annual leave also gives out leave loading. So I want to deduct in their next pay that additional amount that we paid in the previous payroll. Now, to do a deduction of any wage or any value within the system, there needs to be money already being earned within that period. You can't deduct dollars from a zero figure in ClockOn. So, well, unless you're doing a year-to-date adjustment. But in terms of recouping that dollar value, in this case, we've got here that the 2676, then you want to do that in the next payroll. And then the next person, which I'll get to in a sec, is bar assistant number 8. We've underpaid them for 2 payrolls and they should have been paid at a higher rate. And that's sort of the scenario on that one. So focusing on the adjustment on the leave. So if we come into here, before we enter into payroll on those leave adjustments, what I recommend doing is we want to navigate to the employee, and we need to adjust the leave balance of that particular person to make sure they're being allocated into the right spot moving forward. And you want to do it before you run into payroll as well, because in that payslip, once you process it, it'll make sure they've got the correct leave values showing up on their payslip. So in order to do that, we want to select the employee. Under leave here, we want to click edit. And so we need to make the adjustment. So we accidentally paid it as annual leave in there. So we want to put the 8.5 hours back into annual, is this the right person? Yep. So we want to put that leave back into the statutory annual leave, and we want to deduct it out of the personal leave on that particular one. And so that's just a calculation on your calculator. So, so I can do Control C, we'll come into the calculator, paste that, and we just want to minus 8.5. Oh, sorry, we want to add the 8.5 back in. To the annual leave, because we shouldn't have taken it out of the annual leave, and we want to deduct the amount of personal leave because it should have come out of personal leave instead. So, and so that has adjusted the leave balance. What I would also strongly recommend doing if you do make adjustments here is come into your termination and notes section, and under general notes, you can do, leave balance, adjustment. 23rd of the 10th, and you can put in the values in there if you want on that. And that way, when you're running the leave reports and you see a weird jump in the accruals between one payroll or another, you can come into the general notes and you can see that, oh yeah, that's right, I needed to do some sort of leave adjustment on that particular one. And so now once that's done, we will jump back into payroll. And just to save calculation times, I'm just going to jump straight in with the 2 people that I want to work with on these. So I've just unticked the include all employees. I'll click next. Click on that. All right, so now with the leave adjustments, which is the bar assistant number 5, if we have a look here, we want to do a before tax deduction of $26.78. So to do that, we come into here, we use the allowances, click add, and we can call this overpay of leave loading. If you want, you can put the date on that one. It's a normal allowance. Again, I typically leave this as a 0 and type that in the pay advice window. And it's not a before tax allowance, it's a before tax deduction. I want it to come out of gross wages in here. I want it to also deduct, well, I won't deduct from super in this case because I have it set up that leave loading isn't included in the super earnings. If it is, then you'll also want to deduct it from the super earnings. And so that's adding in the overpay on that particular one. And then also there's potentially additional tax that might need, or some sort of tax deduction that needs to be done in that one. And in this case, because you're reducing it, you're going to need to want to put tax back in. And so what we'll call it, we can call it the tax adjustment. And we'll put that in also as a rebate, and that's going to add the tax in if we need to do that. So we click save and we've got 0. And again, oh, sorry, on that tax one, what I forgot to do is just make sure it's pay and next pay only on those, just so it doesn't show up in the following payroll in the screen here. So one thing that you need to take note of in the system is what the current tax is for this payroll that's being processed at the moment. So in this case, the tax is 234, and that's being calculated on the normal week. Now, when we put in the deduction amount, and because I've set this allowance as a deduction, I don't need to type the negative in on that one. So the 26.76, it will reduce that tax amount to be 22.05 on here. So there might need to be the adjustment. And if we come into the payslip previous that we printed out and worked out, because the gross should have been lower, 704.21, the tax should have been a little bit lower. So there needed to be $8 given back in tax. And so we can come into here and we can find out now the difference between those two. So the previous one was 234 minus what it is now with the deduction, which is 22.50, being $9. The difference here is $9. Now, most people might not worry about having paid an extra $1 tax because you sort of get it at the end of the year, but being as you're already reducing their pay, you might want to give them back a little bit more. So we can put in the $1, and that has there balanced out that tax for that particular employee. So what we've done is we've changed the leave on the employee's details screen to make sure the balances are correct, because rather than being taken out of annual leave, it needed to come out of personal leave. And we've also had the overpay, so we're now reducing their pay by the leave loading amount in this scenario as well. And so we've recouped that in their following week's pay. If we move to the next person, for the bar assistant number 8. Now the scenario in here, which is common, but this is well, maybe not so common, but happens from time to time, is that they had a pay increase that should have happened sort of 2 weeks or 3 weeks ago. That last payroll that we did the pay increase, but we need to back pay, and they've just had an increase. They were getting paid $21 an hour, and we've increased them to 23. So we need to back pay the amount that they've missed in there. And so, well, you need to just go through the pay slips, and you can either print out the pay slips, or you can potentially use one of the pay summary reports or a department costing report or something like that, that gives you the hours as well as what was paid. And so the first bit is just go onto your pay slips and work out what should have been paid. So in this case, on that week, for that 8 hours at time and a half, it should have been paid at $34.50. For the time and 3/4, it should have been paid at $40.25. So we would have again had an increase there in wages for that week of $55.25 that we also need to pay. And then we also need to work out how much tax is the difference that we also need to pay in additional to. And so that was 1 week, and there was 2 weeks of those with the exact same weeks in there. So in the calculations that I've done, we've just doubled everything that needs to happen on that one. So now when we're now that we're in payroll for that particular employee, we're doing an increase. So we're doing a gross or a before tax allowance. So before it was a deduction, this is an allowance. So we come into before tax or into allowances. We add that in, and this we will call Backpay. Rate rise or whatever you want to call that. A normal allowance, this one we're leaving it as a before tax, and I definitely want to include this one in super and pay in next pay, and it is a part of their gross wages or salary in that particular one there. And also there's going to be additional tax that needs to be paid. So additional tax, and you can call it back pay, whatever you want to call it, and you'll get your own sort of I guess your naming structures that you need on that. And then for this one, we want to make sure we're processing this as additional tax. I should just quickly mention too, if you are payroll fortnightly or monthly, it does default to week. So definitely change that to the appropriate pay period, so it won't do any over calculations on that particular one. And so we've added those in, and so they're ready to go. We've got our back pay here and our additional tax. Now, again, like before, and whoever sort of raised it before, this is similar to adding the timesheet. So if I wanted, I could come through and add a timesheet in the past. So if I come here and I did wanted to add that one on the 9th, so you'll know timesheets in the past, they are this dark red color. So they're valid timesheets. They're the same as black ones, except they're in a past payroll. So they're valid as well. So you can add those past ones in there also. So what we now need to is we need to take note of what's been processed in this particular payroll, specifically around tax here. So for the tax, $68 was what is being calculated in that particular period on that. So now when we add in the amount that we need to pay, so when I did that calculation, we missed out on paying this particular employee $110.49. That then raises the tax because it thinks that that 110 is a part of this particular week. However, that 110 needed to be a part of these previous pay slips that were in there. So the amount of tax, once we've done all of the calculations for the difference of the tax that still needs to be paid, ends up being $166. Now, we can't just straight up add the 166 in here, because part of that 166 is being already calculated in this payroll. And this is where the tax adjustments get a little bit confusing on there. So what you need to do is, if you just untick this, it just won't pay it. So we've got the $68 that would have normally been paid in this payroll. When we enable that, it makes that to $97. So first thing we want to do for the tax is, it's $68 that was paid within this payroll. We also need to pay an additional $166. So that brings up the total of tax to $234. And we need to find the balance of what needs to be paid between those two periods. So what we need to do is, we need to minus out what's being calculated here, which is the $97 off that $234. And that there gives us $137. So that is what you're wanting to put into here. And so this now calculates the combination of that 68, which is what was being calculated for this pay period, plus the additional 166 for the previous or the missed back pays in there, giving us, as I said before, that $234 tax that needs to be paid. And so that's how you do those tax adjustments. So it's a little bit easier when you are if you edit the pay period back into that previous pay period. I could have just done an addition of 166, a nice quick easy calculation on that. However, when you're merging it into payrolls, then yeah, you need to do that quick tax calculation on that particular one. Now the super has taken care of itself, because it's just 9.5%. So it's just added that figure in there and done the additional 9.5% for those missed dollar value in there. So the super's sort of handled itself for that particular one. And so now we've done both those payrolls, we can process those. And that there has processed those payrolls. And because that was the payroll with all of the values in there, that's when you want to run your STP wizard, because that's the new period that you've just processed that's got all of the adjusted ones. It'll also have the year-to-date value of that person that happened in that previous period when we did the edit of those pay periods on that one. All right, so a couple of, and then from there, you can then print out your reports. So you would have probably printed out PAYG or payment summaries at the end of each payroll. So you can run a new one for that particular period. So yeah, so that's how to do those pay adjustments in those allowances, and how to edit your pay period and do those adjustments in and around that. I'm just turning on delay unmute. So did anyone have any additional questions? Was there something in all of that I wasn't quite clear enough in there? I know it all happened at a little bit of a rocket pace. So I tried not to put too many scenarios in there. I guess some little things just to be aware of when you are doing those back pays is, say with the super calculations, is overtime being a part of the super? If not, you might need to have 2 gross wage allowance parts. What is the base amount of wage? What's the overtime component of that? And only have tax for the normal hours and not for the super part. So someone, Bob, you unmuted your mic.
Oh no, that's okay. Sorry, Ben.
All good, not a problem at all.
Oh,
that's fine.
cheers, mate.
All right, excellent. Thank you so much for your time. Cherie's added a link at the bottom of your chat, so if you can please go there, that would be fantastic. That is to our feedback form. Like I said, it'll give you some, just a little bit about what sort of brought you in on this particular webinar, but also it will show you also what, allow you to say what you'd like to hear in the future as well on those particular, on the webinars that are up and coming. So again, thank you so much for your time. I really appreciate it. I understand that everyone's busy. Like I said, I did record this session, so if you had people that missed it, there will be on our blog shortly. So just go to our website, clockon.com.au. If you scroll right down to the bottom of that page, there is a link to our blog and you can select the webinar on that. If you've got email support and you've got any questions about an allowance that might work for you, please email support@clockon.com.au. Any questions about today, please email education@clockon.com.au. And if you'd like further training sessions or anything like that, yeah, reach out as well. Again, thank you so much for your time. I really appreciate it, and I hope you have a great day.